Welcome. My name is Rees, and this is my channel Echo and Vision. If you're interested in, make sure to subscribe to the channel and hit the thumbs up button for support. How I pick my stocks. A beginner's guide to investing in stocks can seem overwhelming at first, but with a clear strategy and disciplined approach, you can make informed decisions. Here's a simple step-by-step guide to help beginners pick stocks wisely. 1. Understand your goals and risk tolerance. 1. Define your goals. Are you investing for retirement, buying a house, or building wealth? 1. Your goals will influence the types of stocks you choose. 2. Assess your risk tolerance. If you're risk-averse, consider stable, dividend-paying stocks. 2. If you can handle more risk, growth stocks or tech companies might suit you. 2. Learn the basics before diving in. Familiarize yourself with 1. Stock market terms. Learn about terms like P/E ratio, dividends, and market capitalization. 2. Types of stocks. Understand the difference between growth, value, and dividend-paying stocks. 3. Do your research when evaluating a stock. Consider 1. Industry trends. Is the industry growing or declining? 2. Company fundamentals. Review the company's financial health using revenue and earnings growth. Are they consistently increasing? Debt levels. High debt can be risky. Profit margins. Healthy margins indicate good management. 3. Competitive advantage. Does the company have a unique edge over competitors? 4. Look for consistency. Companies that perform well over time often make great investments. Check for 1. Strong leadership. Research the CEO and management team. 2. Consistent dividend payments, a sign of financial stability. 3. Historical performance. Past success doesn't guarantee future returns, but it provides insights. 5. Consider valuation. Avoid overpaying for a stock. Evaluate. 1. P/E ratio. Compare the stock's price to earnings ratio to industry averages. 2. Price to book ratio. Helps identify undervalued companies. 3. Free cash flow. Shows how much money the company generates after expenses. 6. Diversify your portfolio. Don't put all your money into one stock or industry. Diversification helps spread risk. 1. Invest in multiple industries like technology, healthcare, and real estate. 2. Include a mix of large cap, mid cap, and small cap stocks. 7. Think long term. 1. Patience pays off. Avoid frequent trading and focus on long-term growth. 2. Stay committed. Even during market downturns, stick to your strategy. 8. Use tools and resources. 1. Stock screeners. Filter stocks based on your criteria, e.g., low P/E ratio or high dividend yield. 2. Earnings reports. Review quarterly results for insights into performance. 3. News and analysis. Stay updated on market trends using reliable sources. 9. Start small and learn. 1. Invest small amounts while gaining experience. 2. Use a practice portfolio or fractional shares to test strategies. 10. Keep learning. The market is dynamic, and staying informed is key. Consider 1. Books. Read beginner-friendly books like The Intelligent Investor by Benjamin Graham. 2. Courses. Take online courses on platforms like Coursera or Khan Academy. 3. Mentors. Learn from experienced investors. Final thoughts. Investing in stocks is a journey of continuous learning and discipline. Focus on companies you understand, diversify your investments, and keep your emotions in check. Over time, your confidence and portfolio will grow. Would you like help analyzing a specific stock or building your portfolio? There are countless ways to make money, and success depends on your skills, interests, and available resources. Stay tuned for actionable insights and engaging content to help you on your financial journey. 1. If you found this helpful, don't forget to hit the like button and subscribe for more tips. 1. Share this with a friend who's starting their investment journey.